Welcome to Thoughts on the Market. I'm Michael Zezas, Global Head of Fixed Income and Thematic Research for Morgan Stanley.
And I'm Diego Anzoategui from the U.S. economics team.
And today, we'll be talking about the implications of this week's U.S. dockworker strike on the U.S. economy. It's Wednesday, October 2nd at 11 a.m. in New York. Diego, as most of our listeners likely know, yesterday roughly 45,000 U.S. dockworkers went on strike for the first time in perhaps decades at 36 U.S. ports from Maine to Texas. And so I wanted to get your initial read on the situation because we're obviously getting a lot of questions from clients concerned about what this could mean for growth and inflation.
Yeah, of course, there is a lot of uncertainty about this situation because we don't know how long the strike is going to last. But the strike can, in principle, hit economic growth and boost inflation, but only if it is long-lasting, right? Local producers and retailers, they typically have inventories of final and intermediate goods, so the disruptions needs to be long enough so that those inventories go down to critical levels in order to see a meaningful macroeconomic impact. But if the strike is long enough, we might see an important impact on economic activity and inflation. If we look at trade flows data, roughly 30% of all goods imports and exports are handled by the East and Gulf ports.
So then let's drill down on that a bit. If the strike continues long enough and inventories decline, what are the shocks to economic growth that you're considering?
Yeah, I would think that there are two main channels through which the strike might hit economic activity. The first one is a hit to local production because of disruptions in the supply of capital goods and intermediate goods used for domestic production. We not only use the ports to bring final goods, but also intermediate and capital goods like machinery, basic metals, plastic, to name a few. And the second channel is directly through exports. The East Coast and Gulf ports channel 84% of exports by water. Industries producing energy, chemicals, machinery, cars might be affected by these bottlenecks.
Right. So fewer potential imports of goods and fewer potential productive capacity as a consequence. Does that have an impact on inflation from your perspective?
Yes, it can have an impact on inflation. Again, assuming that the strike is long-lasting, right? I would expect acceleration in goods prices, in particular key inputs coming from the East and Gulf ports. And these are cars, electronics, clothes, furniture, and apparel. All these categories roughly represent 13% of the core PCE basket, the price index. Also, a meaningful share of food and beverages imports come through water, so I would also expect an impact there in those prices. And in terms of what prices might react faster, I think the main candidate is food and beverages, and especially perishable food, that typically have lower inventory to sales ratios. And if we start seeing an increase in those prices, I think that would be a good early signal that the disruptions are starting to bite.
That makes sense. And last question, what about the impact to the U.S. workforce? What would be the impact, if any, on payroll data and unemployment data reflecting workforce impact, the types of data that investors really pay close attention to?
Yeah, so we will likely see an impact on non-farm payrolls, NFP, and the unemployment rate if the strike is long-lasting. But even if there are not important disruptions, the strike itself can mechanically affect October's non-farm payrolls print, the one to be released in November. Remember that strikers don't get paid and they are not on the payroll, so they are not be counted by the establishment survey. But a necessary condition to see this downward bias in the NFP reading is that the strike needs to continue next week, that is the second week of October, right? But note that the Fed tends to look through these short-run fluctuations in NFP due to strikes, because any drag we see in the October print will likely be followed by payback in November if the strike is short-lived.
Got it. That makes a lot of sense. Diego, thanks for making the time to talk with us as this unfolds. Let's hope for a quick resolution here.
Thanks, Michael. Great speaking with you.
Thanks for listening. If you enjoy the podcast, please leave us a review wherever you listen and share thoughts on the market with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.